Hello traders, this is Blake Morrow and you're listening to the daily Roundup webinar. I hope everybody's having a great trading session. It is really choppy and sloppy. I think I just made a new saying. Anyway, it is extremely choppy and very sloppy trading. As you can see, the S&P has been whipping all over the place. Excuse me really quick. Let me turn down the volume here. The squawk. Sorry. Okay, as you can see, the S&P. I mean, we were selling off this morning. This is a 5-minute chart, so let's go over to an hourly. So we were selling off this morning, broke through this the pennant, and then we rallied back, tested the underside of the trend line, and rolled right back over. And we're approaching the lows of the session, or near the lows of the session. It's been very messy, but one thing that hasn't been messy. I mean, it's been messy is probably the wrong term for me to use here, is the dollar yen. The dollar yen has just took out my profit for a short that I've been running since yesterday. I've been in and out short and just been shorting it all the way down. The thing is it bounces 10 pips, drops 15. Bounces 10 pips, drops 15. That's the kind of price action we're seeing in the dollar yen. So it's not a clean move. But what you'll notice here is the bond market has been very weak. And here's the 10-year. Actually, that's the 30-year, but here's the 10-year. We're approaching the highs. And so yields are approaching, obviously, lows that we had from the other day. And that's really weighing on the dollar yen. As I tweeted a little bit earlier, if you're trading the dollar yen, you got to be following yields. With yields as weak as they are, there's really no reason to be a buyer of dollar yen. You just kind of stay short. Even if you mistime it, you just have to stay on the short side. Now, here's where the dollar yen should stop. We should stop at the 78% retracement, which is, if you look, let's go over to the daily chart really quick and let me reset this chart. It's a 78% retracement of the previous head and shoulder pattern to the spike high, just a couple of weeks ago. That comes in right around 106. Then the 161% extension of the last move higher also comes in just below that at 105.89. Relative strength is not oversold yet on a daily chart. What I would think is we continue lower here. You're going to see relative strength just kind of peek its head lower and then bounce, right? I think that's what RSI is going to do over the course of the next couple of days. So I think you got to just keep your target set for down here. Now, if you want, and this is not something that I plan on doing, but if it's something that you want to do, perhaps, because it's going to give you a decent risk reward for an entry, is if you want to play counter trend, I think this is the place to do it down here below 106. Personally, because of the chart that we see here, this is the daily chart, right? So because of this false breakout up here, this one, okay, I am expecting a break lower. So let me ask you guys this. For those of you that are listening in, if you can just type in the chat box really quick, what is the currency pair that did the exact opposite of this month? Any guesses, you guys? Correct, Gavin. Anybody else? Giving you a second. Rick, nope. Come on, you haven't been listening close enough. Chad, nope. Dimitri, bingo. All right, very good. All right, I'll spare you guys the rest. It's the loonie. So we did this in reverse, right? We broke lower in December, and I said, hey, once we got back into the wedge, I'm like, be careful, it's going to break higher. And we have been breaking higher. So same thing's happening, just in reverse on the S&P, or the S&P rather, the dollar yen. So that's going to be the risk. If you guys are wanting to try to trade this, I think it's tradable. So let me say that. I think we're going to get a bounce there. I just think that eventually we're going to break down. I could be wrong though. You know, the S&P could drop like 100 handles and we go slicing right through that support. You know what I mean? Because I think it's all more or less dependent on what the stock market's doing. I mean, you look at the bond market. The bond market is just out of control. I mean, this is a major breakout happening. I mean, that's big. How many bond bears are there out there? I mean, everybody I know is a bond bear, right? You don't even know any bond bulls. I mean, I mean, I'm trying to be sarcastic here, but in all actuality, everybody's bearish bonds. Everybody thinks yields are going up. So what if bonds continue to go up, yields go down, and it kills everybody, right? Everybody that had really anticipated the bond market doing this. This is where it starts really getting interesting. And then once we get to some, you know, fib level, I'm gonna just guesstimate here. So just bear with me, because I'm not. And oh, just so you guys know, I actually tried to trade the bond market on the long side earlier this morning. That didn't work out so well. So I'm going to tell you, I'm not going to do that again. Not at these levels, right? So the bond market, let's say it just screams up to, you know, what is that? 127% extension is 138 and change. That would take yields that are at 0.91%. That might take 10-year yields down to like 0.9, 0.88 maybe, somewhere down there. I mean, that's crazy, right? And then from there, I would look to, then from there, I would look to, you know, play the dollar yen to the long side. It was just, but it's the same conversation that you would have with everybody. Oh, I'm so bullish dollar yen. They're going to be caught wrong. And then somewhere down here is going to be the rally. Do you know who's been looking for that forever? You may not know. Grega Horvat. That's his monthly chart. Now, obviously, he's exaggerated down to like 95. I mean, could you imagine? That would be something. But is that unrealistic? You know, in this environment, is it? I don't know. So anyway, I'm just giving you guys some food for thought here. I'm gonna leave you with one more chart for this roundup. The euro dollar. The euro dollar, just so you guys know, is above channel resistance. This was my chart of the day from a couple of days ago. I told you 111 was going to be big support. We hit 111 2 days in a row. Gave you plenty of opportunities to get long down there. I didn't. Okay. Actually, I take that back. I did. Yesterday, I bought the euro dollar twice at 111.05. 111.05 and 111.06. I think I spun out of both of those for 10 pips. Yeah, you can call me a rock star if you want, and I know I'm that good. But I bought the support. I did take small profits, and I'm like, you know, I'll just take my 10 here, take my 10 there. Yeah, so here we are today in breakout territory. Now, I think the risk in the euro, as you guys know, I've been really warning people that in the event we get risk off, the euro dollar is going to move higher. And a close today above 112 is very bullish. Okay, a close above 112.37, and we're probably going to 113, maybe even farther than that. It just, again, this is all really dependent on how you know, far the stock market drops. I mean, if the stock market continues to drop, you're going to see euro dollar short liquidations as carry trades continue to unwind. Still one of the biggest shorts in the market right now. All right. So Guys, if you want to chat with me all day, I know some of you do, but for those of you that don't, make sure you try out ForexAnalytix because that's where I'm at all day. Have a great one. Good luck. And wait, what? Ash asks, have you seen the Euro Pound? You know, I actually haven't been following the Euro Pound today, but we probably bounced really quick. Let me just take, yeah, we bounced off the, I was looking for a bounce off of 86, but we didn't quite get down there. So yeah, I'm not really looking at it now. All right. But hey, guys, have a great one. Thanks for tuning in. I'll see you guys tomorrow morning on the Face webinar, and have a great one.